Very good afternoon and namaskar, ladies and gentlemen. And the esteemed guests, industry leaders, distinguished participants, a very good afternoon to you. It is a pleasure today to be part of this modern BFSI Summit 2024 hosted by the Financial Express. And I would like to extend my sincere appreciation for convening this remarkable gathering, where our collective minds and aspirations converge to chart the course for a fully inclusive financial ecosystem. An ecosystem where there is inclusivity, growth and protection. An ecosystem where uncertainty no longer poses a threat. An ecosystem where risks are not daunting but simply challenges to overcome. Where protection meets possibility. And an ecosystem where the future is secured by the promises we make today. This transformation is secured, or it is not just about economic growth, it's about the complete metamorphosis of our social landscape. Ladies and gentlemen, as we are all witnessing, our nation is evolving at an astonishing pace. We are not just participating in the global economy, we are leading, we are innovating, and we are redefining what progress means. Let's start by talking about the economic surge that India is experiencing today. Our nation operates with unparalleled zest and vigor. And our GDP is just not a number on a chart. It's a testament to our relentless determination and ambition. It reflects the passion, the drive, and the innovative spirit of every Indian. We are not just aiming for short-term gains. Our policies and initiatives are being fueled by a long-term vision. This vision ensures that our growth reaches every nook and corner of our country. Despite the numerous global challenges we have faced, whether it's the pandemic, the climate risks, or geopolitical tensions, India has shown remarkable resilience. Our ability to bounce back and continue growing has garnered global optimism. The world's top executives and industry leaders are convinced that this is indeed India's century. They see the potential, the opportunity, and the dynamism that India offers. Our financial services sector is yet another shining example of this dynamism. The growth we have witnessed over the last decade is nothing short of phenomenal. Innovations like the JAM Trinity, the UPI, the direct benefit transfers, the account aggregators, and so on and so forth, have completely transformed the landscape, making financial services accessible even in the most remote areas of the country. At the heart of this robust financial landscape lies the insurance sector. Friends, insurance isn't just about protecting individuals and businesses from potential risks, but it's about building confidence and building stability. It's about fostering an environment where people and enterprises can thrive without fear of the unknown. Right now, we are the 10th largest insurance market globally, but we are poised to jump to the 6th position by 2032. Demonstrating a sturdy growth, the industry had maintained a CAGR of over 10%, with a premium income exceeding rupees 11 lakh crores in the last financial year, and the assets under management exceeding 65 lakh crores, and the insurance industry providing direct and indirect employment to more than 6 million people. The numbers are impressive, but what's even more exciting is the potential for the growth that exists in today's India, driven by a young and diverse population, and that too with a widening middle class. We aim to tap this potential and take the benefits that insurance protection offers to every nook and corner of the country. And this reflects in our collective vision of insurance for all by 2047, through which it is intended that every individual has adequate insurance coverage and every business is supported by appropriate insurance solutions. This vision actually signifies our unwavering dedication to make insurance available, accessible, and affordable to every individual and business, irrespective of their circumstances. Towards this goal, IRDAI has taken some gigantic steps over the last 2 years, starting from reforming the entire regulatory framework, promoting extensive use of technology, reaching the hinterlands, onboarding all stakeholders towards the common goal, as well as transforming the industry and also making it future ready. With this, we are trying to script a new era of insurance, an era which is progressive, resilient, technologically advanced, and consumer-centric, an era where no one is left vulnerable, an era where every risk is mitigated, an era where every promise of security is fulfilled, and an era where all the stakeholders derive value. Consequently, the last 2 years have witnessed the entry of 6 new insurance companies into the market, and that marks a significant development after a hiatus of 12 years in the life segment and after a hiatus of 5 years in the non-life and health segment. This resurgence not only underscores the sector's inherent potential, but also reflects a renewed and heightened interest from the investors. Though the industry is growing at a double-digit rate, there still lies a huge potential for expansion and as well as deepening of the insurance market in India. There is a significant scope for insurance proliferation in the traditional risk areas like life, health, property, motor, crop, and so on. There's also a big gap to fill in the MSME sector. The missing middle in health requires urgent attention. Additionally, we need to address emerging risks like climate change, pandemics, cyber risks, and so on. As the world becomes increasingly digital, we anticipate a future of continuous underwriting and seamless insurance, wherein consumers demand more and more of personalized offerings. The future will be shaped by the young millennials and the Generation Z, who seek bespoke and flexible insurance products that fit seamlessly into their tech-driven lifestyles, more so in a do-it-yourself, the DIY approach. At the same time, older individuals are living longer and expecting more from their retirement, and that is necessitating flexible retirement plans for an evolving later life environment. There are segments of the population that are still unaware of their insurance needs, and it is the responsibility of the sector to bring them into the fold. These protection gaps, the disparities, represent a massive opportunity, and thus it can be said that the potential of insurance is nothing short of immense. India's vast resources, human capital, technological capabilities, all of this position us to seize these exponential opportunities. And I would believe that the next decade is of paramount importance for the insurance sector, marked by radical changes in the way insurance is perceived, insurance is bought, and insurance is sold. We are trying to build such an ecosystem. When I say we, the regulator, the industry, and the other stakeholders, all together trying to build an ecosystem where insurance is seamlessly integrated into our lifestyles, where premiums are no longer standardized, but the data analytics allows for more and more of customized pricing, where the premiums reflect individual risk and not just the average risk of the group, where the entire insurance process from buying a policy to filing a claim is not just efficient but also trustworthy, where smart contracts automate claim settlement and you don't have to wait for weeks to get your claim settled, but get it instantly, fairly, and transparently, where insurance is a simple, swift, and a personalized experience. This is the ecosystem we should be looking at going forward, while at the same time maintaining a delicate balance in ensuring consumer protection, fostering fair competition, facilitating growth without compromising the sector's financial stability. Friends, the insurance industry has matured over the more than 2 decades of liberalization. The traditional rule-based regulatory framework was not sufficiently equipped to harness the full potential of the sector, and especially in this era of economic and technological advancements. Rather, it was realized that it was acting as a constraint or an obstacle to growth. The evolving landscape demands necessary freedom and sufficient maneuverability, and thus a regulatory overhaul became necessary to align with the intricacies of a contemporary opportunities and challenges. Keeping these in mind, the regulatory system undertook a 360-degree evaluation of the regulatory framework to check for its agility, relevance, and adaptability. It was found that there were many strict boundaries which were affecting the pace of the industry, and also realized that it was stifling growth and innovation and also hindering choices for customers. A lot of approvals were required from the regulator even for launch of a simple product. There were a lot of compliance requirements and myriad returns to be filed, affecting ease of doing business and also increasing the compliance cost. The next step was extensive engagement with the stakeholders, following a consultative and a participative approach. These engagements resulted in better understanding of the ground realities, the needs of the sector, and the transformation required therein. The critical insights and inputs received from these discussions and dialogues helped in ideation of policymaking. Not just that, the revised framework was again put up for multiple consultations and for further suggestions, improvements, and feedbacks. As a result of this very extensive exercise, a new landscape has been crafted for the insurance sector. The new landscape builds on the pillars of ease of doing business, more avenues for growth, promoting healthy competition, enabling innovation, and extensive technological adoption while keeping the interest of the policyholders central. The insurance sector had numerous regulations governing it. If you ask me for the number, it was close to around 78. And this was still around a couple of years back, all accompanied with their respective compliance requirements. And just imagine, remembering only the names of all these regulations was such a tedious task, and compliance was yet another matter. And also the approach was rule-based, which became a little challenging to accommodate innovation and dynamism. So the first task we undertook was rationalization of the regulatory framework, removal of redundant requirements, and moving towards a principle-based regulatory architecture. As a result of this extensive exercise, now 78 regulations have been condensed into 20 regulations. And out of these 20, only 15 pertain to conduct of insurance operations, and the remaining 5 are internal to the regulatory setup. Further, in the era of volatility, uncertainty, geopolitical challenges, macroeconomic changes, we are enhancing the stability and resilience of the sector, and thus a much stronger risk management and a much robust risk supervision framework is also being developed. The entire journey, beginning with the registration of insurance companies, have been made seamless. We have dedicated facilitation group assisting all the new applicants. Once entered into the market, various other flexibilities have been enabled in the spirit of necessary ease of doing business. For example, quick launch of insurance products under the use and file regime. Revision in the distribution architecture, allowing insurers to tie up with multiple distribution partners, and this is a step towards opening it up fully, which we call the open architecture. Increased empowerment and flexibility to the boards of the insurance companies to take business and operational decisions independently with strict accountability through a very strong governance framework. Flexibility in the overall expenses of management, which is now applicable and monitored at the company level. Hitherto, it had several segmental and sectoral caps, so this has been completely freed up. Further, keeping in mind that the insurance sector is capital intensive, the limits for raising other forms of capital or the subordinate debt have been enhanced, and with prior approval requirement has been dispensed of. Efforts are also being directed towards adopting the risk-based capital regime or the Solvency II regime to bring about efficient utilization of capital and alignment with the global standards of accounting and reporting by implementing the IFRS, the International Financial Reporting Standards. Dedicated mission mode teams are working at full throttle within the IRDAI in this direction, and we are expecting that we will be able to do the transition to RBC as well as IFRS by 2025. Regulatory framework for investments also have been revamped, paving way for more opportunities and better returns. A lot of new risk coverages based on market needs have been permitted, case in point being the surety insurance or the non-performance insurance. Various other risk coverages which were not available or inadequately available in the country are being taken up, like long-term products in property, motor, P&I clubs, NatCat solution, parametric covers, etc. Considering the importance of data and analytics for the sector, sincere efforts are directed towards strengthening the sector's data repository, which is the Insurance Information Bureau, IIB, to develop it into a dynamic innovation hub. It is anticipated that the transformation of the IIB into a resilient data analytics institution would enable customized structured solutions for the industry. The way insurance sector is monitored is also getting revamped as we move towards a stronger, agile, and a futuristic risk-based supervisory framework, which would not only discover the inherent risks, discrepancies, and aberrations, rather it would act as a guiding force by providing early warning signals, offering preemptive solutions, and recommending corrective actions, etc. And thus, it would make the entire ecosystem more robust and more resilient. Further, in order to incorporate dynamism and ensuring that the regulatory framework remains abreast with the evolving landscape of the 21st century, the provision of sunset clause is being introduced in all the regulations. It mandates the review of each regulation once in every 3 years. All of this is an essential part of our larger vision of insurance for all by 2047. We shoulder the responsibility of addressing the protection needs of 1.4 billion people. This means reaching 140 crore people, offering protection to them and their loved ones, their businesses, their assets, their properties, while acknowledging the rich diversity that exists in our country. We encompass a fifth of the world's population. Such is the diversity that we have multiple markets within one market. These come with multiple pocket sizes and multiple preferences. Our demography is favorable and disposable incomes are rising. A one-size-fits-all approach simply cannot meet the varied needs of our beloved nation. So what is the solution? The answer primarily lies in leveraging technology that not only drives development but also caters to the diversification needs that exists in India. Undoubtedly, insurance, like practically every other business, is being redefined, is being reshaped by and around technology and real-time data and insights. Today, blockchain-enabled smart contracts, telematics, variables, chatbots, and other tools leveraging AI, ML, big data, IoT are causing disruptions and changing the traditional fabric of the insurance sector. Even fraud detection has become more effective with the help of data analytics. However, the question arises whether all of this is sufficient. Ladies and gentlemen, IRDAI's objective extends far beyond establishing mere tech-led insurers. It is driven by the ambition to utilize technology to extend insurance coverage to each and every corner of the country. The goal is to empower customers with choices, not only regarding insurance products, but also in terms of how they access and pay for them. While the extensive use of technology is crucial for achieving these objectives, the aim is to ensure that technology serves as a means, not merely an end in this pursuit. Our trajectory is steered by democratizing insurance, which permeates to the last mile, to the last house, and to the last person. In line with this commitment, the insurance industry is passionately working towards creating one-of-a-kind, unique e-marketplace called the Bima Sugam, leveraging the nation's indigenous digital infrastructure. It would be a game changer in the insurance landscape. You may ask how. The universalization of insurance would become possible as Bima Sugam would provide the reach and a bouquet of insurance services in real time at the doorstep of the prospect or the policyholder. The tech-led e-marketplace would transcend geographical boundaries and income disparities. It would be integrated with various data stacks, enabling seamless flow of information, making onboarding, processing, pricing, underwriting, and claim processing more efficient. Bima Sugam is expected to cause a big explosion in the insurance intermediation. It would become the tech arm for the insurance agents. The insurance agents are the foot soldiers of insurance, and they can do it through a plug-and-play model, making them more accessible, more productive, more efficient, and thereby enhancing their reach and also their income. For the other intermediaries also, the Bima Sugam would act as a growth catalyst, reducing cost of intermediation and promote seamless access to a wider consumer base. Bima Sugam further would host all necessary information and available offerings at a single place, thereby reducing the information asymmetry. Access of such information would result in more choices and avenues for insurers, intermediaries, as well as the consumers, creating a win-win-win situation by not only enhancing reach, but also the depth of the insurance market. However, it may not be achievable without the active involvement, support, and participation of the state governments. In this direction, a state-level insurance plan has been formulated, wherein each insurer has been entrusted with the responsibility of increasing insurance inclusion in the assigned state or in the assigned union territory. The support that we have received from the state governments in this initiative is very encouraging, with many of the states formulating the state-level insurance committees and the district-level insurance committees. Working at the grassroots and providing protection to the most vulnerable would be the key to our vision of universal coverage of insurance by 2047. However, this is not the end. Our goal is to script a tomorrow which is truly inclusive. For this, we need India to be a fully banked, a fully insured, and a fully pensioned society. And thus, all the participants of the BFSI sector need to come together as one unit, catering to all the financial needs of one customer. Through this integration, individuals gain access to a wide array of financial products and services tailored to their diverse needs and aspirations at one place. By harmonizing the efforts and sharing resources, the BFSI sector can amplify its impact, reaching the underserved communities and empowering them with the tools to build a secure financial future. All of us, all the stakeholders, be it the industry participants, the distribution forces, businesses, professionals, media personals, common citizens, everyone's participation is important. Everyone is a change agent, the torchbearer of this transformation, which would ensure that our nation's journey encompasses not just milestones, but a harmonious symphony of progress and security. We all have got this opportunity to be part of this Mahayagya of taking our nation to the heights she truly deserves and witness the emergence of the Viksit Bharat. Achieving the objective of universal insurance coverage, resulting into sustained growth and development of India, is an integral part of this journey. Ladies and gentlemen, our vision of insurance for all before 2047 is very much a possibility, and 2047 is just the outer limit. Let us strive together to make it a reality very soon. Thank you. Namaskar.
This is Sanjay from the insurance industry, now into the tech side. Now, only thing that it has been recognized that Debasish Panda is one of the innovative chairman in the insurance industry, always being spoken about. And that's the growth has been, insurance industry has been happen across the corner, left and right, center, everywhere. And it has been recognized by everybody. Only thing is that I would like to know, just like the insurance company are allocated to each state level, or the same kind, are they allocated just like public-private partnership on the education side, just like Insurance Institute of India tie-up between the state level with insurance company, so that they can get the allocated land over there, so education can be transformed on that state level, and the educations, with educations the transformations can happen. Is there any kind of thought on that area, on the education side?
Well, I couldn't really capture the question. You are talking of
educations, just like
I mean, to propagate the idea of insurance through the education system? Or? Yeah. See, insurance awareness or creation of insurance awareness is also a very big challenge within the country. Many of the people wouldn't understand what insurance does. So, what we are contemplating do is to also run a massive insurance campaign through a multimedia campaign. Both the industry will run it through the councils and the IRDA. We are in the middle of that journey, and hopefully in the next few months we will roll it out. And for each of the segments which are particularly for the most vulnerable population, like health, property, life, accident, so that we intend to run. And yes, of course, your suggestion of, through school, through colleges, through the students, that could be a very powerful channel of also reaching out to the people, propagating the idea of insurance and how it can help people at times of, uncertainties. So surely that is something we are looking at.
Yes, tying up with colleges and educations through that kind of public
and thank you for the question.
Thank you, sir.
And the comments. Thank you. Yes, sir.
Medical insurance has been stagnating for quite some time in India. And one of the arguments that has been put forth is that because of portability, people shift their policy and they don't buy new policies. So is there some kind of thinking in the regulator, from the regulator, on handling this?
I think many changes have been made, particularly in the health segment, empowering the policyholders, their rights and their empowerment. So only very recently a detailed master circular has been issued. I would request you to go through it, wherein now the restriction of age has been lifted. Earlier it said that beyond 60 insurance covers were not being offered. So for all ages, for all kind of pre-existing conditions, for chronic illness, all of that now gets covered. Of course, the cost will be different for different kind of products. So all of that has been taken care of. Now, so what's your question? Your question is?
Medical insurance growth has been stagnating for the last few years. So that was the question.
No, the growth, see, the year-on-year growth is more than 25%.
Yeah, but overall, as a percentage of GDP, it has been stagnating.
No, but you see, the good point is that with the removal of a lot of barriers that were there, including tariffs, the wordings, all of them have been removed. As a result, prices have also come down. And what we are looking at, if you widen the base, then obviously the costs will also come down. So it's a very promising as far as the health sector is concerned, because the growth is consistently happening year on year. It is around 25-26% growth. A lot more new players have also entered into the health segment. There are a lot of others who are waiting to also open new entities. These changes which have been brought about and they have been given a transition time also to implement. In terms, and we're trying to make the customer journey seamless and frictionless, and this is what the attempt is towards. And I think going forward, more and more people will opt for health insurance.
Sir, my question about the data security of the end user, is it any guidelines are there? Because generally wherever we took any motor insurance or health insurance, the moment you enter any data, car number and something like that, you receive the multiple calls from the every corner of the insurance companies, like it's like painful them to address these things.
See, so there are detailed cyber security guidelines which have been, very extensive guidelines have been issued to protect the data and the data privacy part also. Now we are also instructed the insurance company for this telemarketing as per the circular which has been issued by Telecom Regulatory Authority of India. So I'm sure the TRAI is also taking necessary action to make sure these kind of calls through telemarketing doesn't go to the customer or whatever the protocol that they have decided. So that also we have asked the insurance companies to follow very strictly. But protection of data, cyber security guidelines, all of them have been detailed guidelines have been issued by the regulator.
No, but as you are also a regulator, no? You also be regulator, so you are putting your responsibility to someone else.
We have issued the cyber security guidelines to all the insurance companies.
Okay, so they need to the follow.
Right.
Okay.
Thank you. Yeah. Thank you very much and for the patient hearing. Thank you. Namaste.